Very good morning. It's a great pleasure to present today in this seminar on a very important topic. Pandemic is behind us, hopefully, and in India, definitely we feel that a new um, phase is now in front of us to rebuild, to regain the time that is lost, and to really learn from some of the things that we could see during the pandemic and how to deploy those learnings to make even better business models and a brighter future. So in this context, I think it's very timely to discuss learnings regarding digital transformation. I'm going to talk about the learnings of BCG on digital transformation in banking. And I would highlight that just a few weeks back, BCG concluded a massive study, the whole world, covering over 1,000 companies to understand their perspective on digital transformation and what has succeeded, what has not succeeded, what works, what doesn't. And obviously, we covered over 100 retail banks as well across the whole world, Europe, Americas, and Asia, roughly equally divided. So what I'm going to do today is to share some of the findings of this study, and it has very direct relevance to all the financial institutions, banks, non-banks who are engaged in rapidly transforming themselves. What we call today the institutions who are transforming themselves from digital legacy or legacy institutions or legacy incumbents to digital incumbents. And that journey is very important, is very interesting. And obviously, the financial institutions are not just having to become digital incumbents, they have to become digital natives and then hyperscalers. So that's the journey that we have seen. And some of the learnings that I'm going to talk about today is very relevant for this journey. So let's get started. On this chart, we're just showing at a very high level what was the message that we got as we talked to the banks. We are asking them, what do you see as a primary driver for digital transformation? And just till last year, almost majority of the respondents would say it is COVID that is driving them to rapidly transform. Even now, a large number of non-banks industry people still say that COVID pandemic is accelerating, but not for banks. I think that's a big message. On this page here, you can see 35% of respondents basically ranked the shifting industry dynamics, shifting consumer tastes, is basically that fundamentally the rules of the game as far as banking is concerned are completely changed. And it is not an external pressure due to pandemic anymore. There is a realization that the banking industry is set in next 5 years to pretty radically transform because of the tectonic shifts in the dynamics of the industry and consumer tastes and behaviors. And as the youngsters are coming up, the banking has a whole new meaning. And that is dominant, as you can see, very large share of respondents talking about that, much larger than, almost 10% larger than our sample of the entire, set of respondents. So that is a very big thing. And also you can see the number two is also higher than the average of the whole industry, which is pressure to innovate. New entrants are coming up, and it is real. Let's look at this chart here. Now, this chart is global, and I will talk about it and also provide perspective from an India angle. Now, as you can see on the very left-hand side, from the early 2000 to 2020, over these 20 years, as far as market capitalization is concerned, 30% today globally, market capitalization in financial institutions, we have to keep insurance aside, is driven by non-banks, fintechs, payment service providers. So the banks are contributing less and less of the market capitalization. And this is a global picture. In India, it is 40% already. So the disruption is a little bit more intense in this market. For the audience who are here today, I think this is even more stark, even more important. Fintech is no longer a niche that you talk about, some startups doing something. Fintechs are actually real, and they may be looked upon as a future of financial services, and banks have to really take very, very strong cognizance of it. Number two is, the valuations are starting to reflect, most banks are rated at 1 to 2 times net revenues. Fintechs are rated at 13 to 25 times net revenue. This is global picture. In India, it will be even starker. And of course, the markets are basically just discounting the future, both in terms of growth rate also, and also where the customers of the future are going to likely to go. And then this is also reflected in the amount of private equity investment that has taken place. In 2021, calendar year 2021, globally, the amount of money that went into fintech space, 131 billion, new money that was invested was more than the sum of entire money that was invested in the last 3 years, 18, 19, 20 put together. And India has emerged as the top, as the third destination, third biggest destination to get this flow. And with the recognition that Indian banking sector is one of the most disrupted, and probably it will be the poster child of how banking sectors of the world will look like, given the way we are progressing, especially in light of our public digital stack, the India stack, the fact that we have had such phenomenal success with UPI, the fact that already, fintechs and big techs like Google and PhonePe and many others are already, a very dominant channel through which most of the people in the country are doing banking or the basic banking in form of payments. So that actually just puts us the stage for an even more sort of critical importance to how the journey has to be started, because the attackers are here to eat the lunch of banks, and that's quite clear. All right, so globally, when we did this survey, we asked people how successful you are with your current digital transformation initiative, and that's the topic of today's discussion. Digital transformation, what is the learning? And this chart basically shows how the respondents worked out. So we basically asked, the metrics that you have set forward for digital transformation, how successful are you in them? And people who said that they were able to meet the target value or exceeded them, they could create a sustainable change with their digital transformation. We call them the win companies, which are here in the green color. And then value was created, but not all the targets met. Only about 50% of the targets were really met. And sustainability is not yet fully established. That is the yellow zone, which we call the worry zone. And then there are a number of companies who are in the woe zone, which is where the value did not get created, less than 50% of the targets met, and so on and so forth. And you can see 13, 52, 35. That's the number for the whole sample of over 1,000 companies across all industry sectors. Banks are not very different. So as you can see here, compared to 35% of the companies who self-report that they feel that they are in the win zone, 38% of the banks report so, but a vast majority struggle with it. And I think that's not something new. I think it is appreciated by most industry folks that it is tough. Getting digital transformation to deliver is not easy, and many institutions, they start and they falter on the side. And what exactly makes a successful transformation and what doesn't, I think that's a very important topic of our discussion. And for retail banks, it is a matter of life and death. It's not a matter of something that is after top 5 priorities. It is the top priority because of dynamics of the industry. So our research showed that there are these 6 dimensions. And in these 6 dimensions, one has to really see whether you are really at the best possible state to ensure success. And in today's presentation, I'll talk about these 6 dimensions and what are the dynamics of each of these 6. Let me take a minute to really explain these 6 factors and what's the dynamics of these. So firstly, of course, integrated strategy with clear transformation goals. I think it is a very interesting point. Obviously, you can say this for anything. You need to have a strategy goal so that then only you will be successful. But in digital transformation, I think it's the reason it is here is because many times, given the so much of talk about it, I think everybody feels the pressure to do something. So they get started because they want to talk about, yes, we are also doing something in digital, or we also have this cool and shiny app. And by the way, we are also integrating and with somebody else or whatever, or and so on and so forth. There are so many cool, shiny objects when it comes to digital that it is very easy to get distracted by the cool, shiny objects. And what we found the winners to be doing is to put it down very clearly, why we are doing it, what we're doing it, how it will be done, as a very good, solid strategy discussion should be. What exactly are the goals? What numbers will change? Which metric will change? And then work backward through it very rigorously. The good old strategy discussion is still relevant, even though Many people feel that, okay, we know what we have to do, just get that done. And then it ends up in a state where you've got multiple initiatives and they're not sort of talking to each other, or you do something very nice and it looks very cool, but doesn't scale. It just stays very small and localized, but your mothership is not changing. One of the most interesting things, or not so interesting from the perspective of the players, is that many institutions find that you have very localized excellence in digital, but it doesn't scale. That the mothership is not transforming. That you find it easy to do digital somewhere in the side, but the main institution is just not moving because the legacy is just so entrenched. Right? So that is a very important thing, and that's where it should all start. So number one. Number two is leadership commitment from CEO through middle management. Again, you would say, well, everything requires this to be truly successful. Everything requires leadership commitment. We have realized that many times what happens is the CEO is very committed. Yeah, you make a big statement about it. You commit yourself publicly. And then you hire somebody who's chief of digital officer, and that chief digital officer has to do something, and then everybody else remains the same. And then the hope is that the chief digital officer will somehow do the magic and the organization will change. That doesn't work. We found that the institutions who are able to really transform, there the leaders have to come together, the current line leaders who run legacy, and not just the leaders, but leaders in the middle management. And they need to sit together and look at it and say, everybody who's currently running a business, in a year from now, digital transformation will lead to what change, and why it is relevant for me, why it is important to me. If we are not able to translate digital strategy into implications for everybody in middle management, it is difficult, because what happens is that on the side, certain digital transformation initiatives are taking place, they deliver some results, then you have to scale. When you have to scale, you have to go to the line organization, the current line organization, say, let's implement this. And every time you implement something on a new digital platform, initial periods, it doesn't work. And if it doesn't work, there is a huge resistance from the current line organization to just not adopt the new thing and continue with what we have, because we've got pressures for quarterly profits and this, that, and the other. And there is so much of resistance that the things fail. And in my personal experience, the only way digital transformation succeeds if actually the ownership of digital is with the current line management, and it is not delegated to somebody on the side to say, you are responsible for it. If it fails, it's your problem. If it succeeds, I will benefit. This doesn't work. So a very basic idea, but it has profound implications when it comes to digital transformation. Number three, high caliber talent. Once again, of course, nothing can happen without high caliber talent, isn't it? But in the context of digital transformation, it's a very unique thing, because the kind of talent that is needed for digital transformation is very different. And sometimes it is so different that people can't even relate to it. Let me give an example. For a long time, I have worked with financial institutions for a very long time. And you go to any financial institutions, you will always find the business and IT are fighting. Like, it's not true for any, but for most. Like, the business has so many complaints about IT, IT has so many complaints about business, and the two sides were enough to fight. But actually, if you really want to do digital transformation, you need to have a third type of people who are designers. Now, many institutions don't appreciate that. You need to have a high quality design team in-house to do this. That talent is a very different talent, and that talent is very different from technology talent as well. Definitely very different from the traditional technology talent that most financial institutions have. And if that was not enough, you need to have data scientists. Data scientists are a very different talent in themselves. And within technology also, the world has many different roles and many different job families, and they are actually quite different. The people who are working on the front-end technology and people who are working on managing the back end, have very different priorities. They work on very different rhythm. And so the segmentation is quite important. It's very important for leaders to appreciate this dynamics of talent and what it takes to keep the talent together, what it takes to make them to come to you. It is not possible to outsource everything when you're trying to do digital transformation. Of course, you cannot hire everybody as well. You have to outsource. You have to have technology service providers. You have to have people who are building the code, doing the design for you. But if you do not have sufficient capabilities in-house, it is very difficult to keep the outsourced partners to really be fully aligned with what you want to do and get the best out of it. Right? It goes out of sync very quickly. So talent. Um, this is, as I will show in my subsequent slide, this is one of the most severe problems for most institutions, because digital transformation without digital talent, very tough. Number four, even if you have got the talent, the way of working is to be very different. And most institutions start with, even the ones who have a very good project management track record, that they have taken projects and delivered on time, or they have delivered on them. Even those institutions have a tough time, in digital transformation. And the reason is as follows. The world is changing quite rapidly. Within 12 months, things are very different from where you start. So if you start on a mega project, which has a 3-year program and milestone first drop, after 12 months, you start the project, you start making something, and you release with a lot of fanfare 12 months, maybe not 12. You've decided to do 12, it will be 14 or 15 by the time you launch it. And at that time, you see, but not new players have come and they are having a lot of new things. And when we started, what we were making was looking cool, but now it's not looking cool. And it's already out of sync with market realities. And new people have done different things because we are competing with a lot of entrepreneurial energy of startups, and you can't predict. And that is a big disappointment for a lot of institutions, that you are always catching up. And that's because the way of working has to be changed. And people have to get used to, or have to embrace the idea that you will work in what is called agile squads, which is a team of engineers, team of business people, data scientists, designers, coders, but also technology architects, but most importantly, business owners, who are called the product owners in this world. They work together, and they work together as a team. Now, again, we have seen cross-functional teams existing for the last 50 years. So what's new? What's new here is that this team has to have a bigger and more important hardline allegiance to itself as a small team which is trying to deliver something, the goals, and they live or die with that, rather than coming together for something, but staying very strongly associating yourself with from the department that you come from, because the silos are the biggest problem. In the traditional world of finance, files moving from one department to the other was a norm. And over here, if things move from one team to the other, it is a complete disaster. It does not work. So if there is a small team, that team is set for a goal, and they have to learn fast, fail fast, work together, anticipate problems. The team should also have compliance people part-time. It should also have legal people part-time, so that once things are done, nobody comes and says, but it's not possible. We can't do this. This is a problem. That's a problem. Everybody has to come together in the beginning, set together, and agree on a goal, and then work together on it. And then if the things don't work, it's everybody's problem. Like, if you can't have a compliance team saying, I told you so. You can't have legal team saying, I told you so. You can't have other technology people saying, I told you so. So this change is not a small change. This is a very big change. And many people try to do lipstick on a pig by saying, okay, we will just bring cross-functional team. What's the big deal? You'll get 4 people to come together. But in order to make it work, you need to change their performance management. You need to change the way they perceive their growth in the organization, both short-term, long-term. And unless that is fundamentally changed, this doesn't work. And silos exist because we have all grown up in a silo in most of the traditional organizations. So if we want to do this, fail fast and learn behavior, it needs a very different way of organizing himself. And finally, effective monitoring of progress. And it's again, everybody does that. In terms of digital transformation, it's important to say, what are the metrics? Just launching an app is not enough. It needs to change real metrics. If you have created a new process by which loans are going to be given, and the old paper-based processes are going to stay in the side, how many loans are actually going through the new process and how many are going through the old process? And if that metric is not tracked, you create a phenomenal journey. And that we know the standard term in the industry is called the happy path, which is one of those situations where the customer doesn't have to do anything, meaning everything goes straight through, cut, and you get the loan. What percentage of loans are actually going through a happy path, even though you have the happy path? And many times we find, okay, only 5%. 95% are going through the old method, or there are too many exceptions or too many escalations, and then it doesn't work because fundamentally the organization is not changed, and you by far don't look like a digital native. You look like, okay, small part of it is digital, but by and large it's the same thing. And that is why metrics and measurement are very important, so that they keep you honest. And my experience is, that designing and implementing is about 30% of the work. 70% of the work is actually then once you implement a new journey, implement a new tool, implement a new app, making that app to be adopted by your own employees requires a lot of very careful problem solving. Why are they not adopting? Solve this problem, solve that problem, and then you land up with solving about 50 or different problems to unlock the small reasons why things were not being adopted. And if measurement is not very sharp, this is going to slip through. And last and not least is technology itself. Most institutions have monolithic IT architecture, which is not easily scalable. When we talk about digital, we want to have hyper scalable business model where you can scale very quickly. Cloud is very important. It is very important to have microservices enable architecture so you can connect with partners very seamlessly. That's a very core mantra in the digital transformation. Nobody can just sit in isolation themselves. They need to be connected. Financial institutions in particular in the future have to sell most of their stuff on other people's platforms. Right? When people are purchasing a car, they are on some platform. At that time, they need to be able to buy a loan. And it should be seamlessly integrated. When people are making a payment, buying something on somewhere, they need to make payments have to be integrated, and so on and so forth. So embedded finance is a very big part of the future, and it's important to recognize that technology architecture, if it is not keeping pace with it, they will not be able to stay in tune with the requirements of their partners. So if you go to an e-commerce player and say, we want to tie up with you, the requirements that they put on you in terms of the turnaround time, the speed of response, your API should respond in so much time. Those things are not possible unless the IT architecture has been upgraded sufficiently. So these are the 6 dimensions. And I would like to just provide a little bit more context on these 6 dimensions. So obviously, we've studied more than 1,000 organizations. We found some of them say, okay, we are doing very well on these 2 and not 3. And some of them will say, we are doing very well on these 4, but not 2. And we found that, not surprisingly, but a very, very clear linkage between the number of dimensions that organizations feel sufficiently confident that we have done what it takes and the results that they achieve. As you can see, as you have 1 to 6 dimensions under control properly in spirit, you can see that the impact is accelerating. It starts slow, of course. Then by the time you reach 4 dimensions are doing well and they're firing, and you're already starting to see very good success rate, and then it just exponentially goes up. And it's important to highlight that in the world of digital, there are hyperscalers, right? Hyperscalers like Amazon, Google. Businesses scale very rapidly. They are so well-defined digital organizations, and they will be mastering all 6. And it's important to see where one performs on each of the 6 dimensions, because that's the holy grail of digital transformation. That if you are digitally transformed, you should be able to hyperscale very quickly. It's not just about cost reduction. And so we've been able to plot banks across the world. Indian banks will not be any different. So we got people to rate themselves. Where do you, on a scale of 1 to 10, on each of these 6 dimensions that I talked about? And on this chart, you will see the range. The highest and the lowest, and also the top and the bottom quartile, which are the yellow dots. And the bank symbol is there everywhere to show where the banks are. As you can see, banks by and large, on an average, are in the middle, because banks are large a part of this of the sample themselves. But there's one area where banks are, on an average, banks are very close to the top quartile, which is leadership commitment. Was very true. Most of the leaders in financial institutions are starting to appreciate that there's no running away from it. We really need to do this. So leadership commitment is there, and of course that also means that leaders are starting to appreciate that there's no way away from it. There's no option. We have to do it. And so more and more energy will go into this space. But on other dimensions, we don't yet see banks really moving anywhere close to the top quartile. And that's the reason why, in terms of success rate also, we don't really find financial institutions to be more successful than other industries in achieving success in digital transformation, even though for financial institutions, it is such a do and die situation. So clearly, it's a call for action. And hopefully today's conversations will have good quality deliberations on how to move the needle on other dimensions, assuming that number 2, which is the commitment of the leadership, is really there. And now a few more some small things just to bring to light of what financial institutions are doing. The single most important thing that all financial institutions try to do is to get their customer experience and journey right. And I think that takes about 70% of the effort of most financial institutions. It is a very difficult job. Journeys have a lot of complexity, and in order to create, and you have to actually transform the legacy journey. You can't always reimagine everything. And so, as you can see, it just stands out as one of the most important things that use case that banks are working on. And the second one, quite understandably, is how to connect to other digital ecosystems, how to create partnerships, because financial institutions are realizing that very few people, consumers, really want to deal with financial institutions. They feel that is just incidental. They want to do things, they want to buy things, they want to shop around, they want to buy a car, they want to buy a house, and then they want financial institutions to be silently available there at the right time, seamlessly integrated into that journey for them to provide the service. And so this whole thing around business model innovation, ecosystems is very much in the top priority on most institutions. And as you can see, it comes at top three. We also found something very interesting that is worthy of attention of the audience here. Here you will see on each of those dimensions, we basically said, where are the banks which are really succeeding? And there are the which are not succeeding. So the green ones are the banks which are succeeding, and the yellow ones are the banks which are not succeeding or not so successful. And just to see the difference. So as you can see, customer experience journey, like everybody's emphasizing that as a top priority. The successful banks are really on the extreme, but not so successful are also there in terms of the priority. Business model innovation they are doing, but we found that a very big difference between the winning banks and not so winning banks is the gap in the sales and market acceleration. Because very important to realize that digital fundamentally obviously can reduce cost also, but the most important dimension of digital transformation is hyperscaling. Like your sales and marketing, if you invest in digital, you can scale the organization rapidly and you can unlock that. And that is a very big difference between the winners and the losers in the banking sector. While most other places you'll find they're by and large similar, there's obviously a gap. But this is one of those places where we find much more investment by the winners than by the people who are behind. And then I'll just present this one last page before I end the presentation is another dimension where we found a big gap. So in this chart, you're seeing enablers. Where are you focusing on? Different dimensions. As you can see, new ways of working, digital skill building, setting up digital hubs, upgrading technology. And you find by and large the winning banks, which are green, and not so winning banks, which are red. Obviously, there is a gap, but a small gap. But the place where you find a big gap is the adoption of scaled implementation of AI solutions. AI is very important because to my previous page, AI is used, artificial intelligence analytics is used to create personalization, to create digital marketing, to unlock growth. And it is also used in managing risk better and better, how you can manage risk in completely automatic customer journeys. Right? And these two areas are so fundamental to digital transformation in banks that if institutions, as you can see, the only place where the red bar is higher than green is upgrading technology. One of the mistakes that many institutions make is they just start technology for the sake of technology. Or the technology team says, give us time, let's get the technology sorted first, then you can do the business transformation. That doesn't work. And that leads to a lot of situations where things don't work out because technology is never ready because it's a moving target. So it's important that technology transformation is embedded inside a business initiative, and artificial intelligence is kept front and center of this transformation. Thank you very much.